Welcome back. We'll now be discussing healthcare needs analysis and strategy for Business 506 at California Lutheran University. Some of the objectives for today. By the end of this lesson, you should be able to describe the process for determining a person's healthcare insurance need and discuss some strategies that would improve your client's risk management position for healthcare issues. So on needs analysis, the process of analyzing the healthcare need. Well, as anytime we're doing analysis, it starts with knowing the client. Knowing the client's goals and priorities, their current situation, where they're at, what risk exposures they face, as well as their medical needs, since we're talking about health insurance, medical needs for themselves and their family members, and the financial assets and emergency funds available to help choose the right level of premium and deductibles. Next step is going to be to review the current plan. Healthcare benefits provided by the employer, or if they're self-employed, an individually owned policy, or eligibility for social programs, whether that's through to disability, or if they have spent down their assets and they're now MIA, medically indigent adults, and they qualify for social programs such as Medi-Cal in California. Next is to assess alternatives and offer recommendations. On the Know Your Client, a young couple with children, for example. Basic medical protection need, inpatient and outpatient, for each member of the family is something that would be a priority. If they're a growing family, prenatal and postnatal care for the wife. Looking at catastrophic coverage, so high dollar amounts that if there is a major accident or a major disease, the family won't be bankrupt and have to sell off all of their financial assets because one member of the family is ill. Looking at dental and vision needs, the ability to self-insure, specifically what financial assets are available to the family. Hand in hand with that goes emergency fund assets. Next to be looked at is job stability. If they're in a field where the likelihood of job change is unlikely, there's a fair amount of predictability with regard to benefits that you could rely on. Next is eligibility for government or community health support. Again, that could be as a function of disease or disablement. It could be as a function of asset level. There's a number of ways that can come into play. So, current risk management plan might include items such as employer group coverage, individual policies, social insurance, supplemental coverage, self-insurance, special insurance such as travel insurance, or any combination of the above. Important issues to consider when assessing the current gaps and weaknesses of the current health management plan include annual deductibles, coinsurance percentages and stop-loss levels, coordination of benefits, medical conditions and future insurability, the ability to fund additional premiums, deductibles, and copays, access to continuation through COBRA, and lifestyle choices and avocations. On the recommendation side, some of the recommendations that might improve the current plan's weaknesses and gaps could include to modify employer benefit options, open a health savings account if eligible. A note on the HSAs. Not only is it a way to pre-plan in essence and pre-fund potential deductibles while you're healthy and not under a hardship, there is also a tax deductibility feature of that. It is above the line AGI tax deduction. Current year limits $6,450 in 2013. So it's another way to help manage both taxation as well as pre-plan for a major health event by creating a reserve. Third bullet point, adding a supplemental plan, continuation of coverage through COBRA benefits, or COBRA provisions, I should say, purchase temporary or specialty health insurance, replace the current policy, and also look at preventative health care and what's available through their current policy. Oftentimes, there's an annual employer enrollment period. For most industries, this is the last quarter of the year, and that is when employees can make and alter benefit selections. They can select a more appropriate type of healthcare provider, such as change from an HMO to a PPO. One of my clients had been on an HMO, and his doctor told him that he needed to have a hip replaced, age 61. Well, he didn't need to have it done immediately. he was approaching his open enrollment, and he was able to switch from an HMO to a PPO and select an orthopedic surgeon who specialized in the hips that was not in the HMO group. So he made that change for the year, got the hip replaced. The next year, he switched back to the HMO because he had no upcoming major medical events. But since he was able to plan for that one, he was able to take advantage of that provisions. The other point is the ability to add coverage. For example, the ability to pay for a group dental plan or group vision plan. You can make those selections at that open enrollment time. HSAs. We briefly talked about this already. They are a tax-advantaged medical savings account available to individuals who enroll in a high-deductible health plan based on a minimum deductible per person and per family and out-of-pocket expenses. Annual funding limitations apply. I mentioned currently $6,450 is the limit for 2013, and that will be indexed each year and published by the IRS. The HSA contribution is an above-the-line deduction, so again, very favorable. There's no quantifying it through other aspects of your tax return. It's just a straight top-of-the-line deduction. And the earnings accumulate tax-free. Distributions are tax-free when used for qualified medical expenses. Another strategy, add a supplemental policy. If the client's insured by Medicare, add a Medigap, also known as Medicare Supplement policy, purchase Part D for prescription drug coverage, and international travel insurance. So on the international travel insurance, retirees, I've been asked this a few times, should I buy this? And I explained that, the first thing I ask is, which form of Medicare do you have? Is it, they have roughly 10 or so different plans, plan A, C, F, J, etc. Some of these have coverage for international travel, some don't. So knowing which plan they have really helps with the decision to purchase international travel insurance when they go on a European cruise for 3 weeks. If the client's insured by the employer, supplement coverage for dependents not covered under plan, add dental or vision care not provided as part of the basic package, or purchase individual disability policy to augment percentage of pre-disability income benefit. Dealing with the loss of benefits. If the client loses their job or access to workers' group insurance, COBRA may be the best choice. And again, I would, sitting down with the client, encourage them to jump on that right away, because if there's any underlying conditions, or even if there aren't, but they get sick or get into a bad accident, they aren't left uninsured. So until you have Plan B, stay with Plan A. If COBRA is not an option for whatever reason, then converting the employer's group coverage to an individual policy should be explored. If COBRA or conversion is not an option and you're not yet qualified for Medicare, consider purchasing a short-term major medical policy. So catastrophic coverage. The mentality is you will take care of the little things. If you get the colds or a flu or twist an ankle, but heaven forbid there's a traumatic accident or a major disease manifests itself, that you won't be devastated. Last bullet point, another possibility is to obtain health coverage through a trade or professional organization. On purchasing temporary insurance, temporary medical insurance provides coverage for periods between 30 days and 1 year. Its purpose is to bridge the gap in insurance between jobs or life transitions. Make sure to understand the breadth and limitations of coverage. Again, these tend to be major medical, kind of going back to the old hospital surgical policies. No preventative care, but they're going to be there for the major catastrophic events. They'll typically have high deductibles too, but the benefit is the client will not be financially devastated should a major event occur. Another strategy, purchasing a specialty policy. Insurers offer a variety of specialty policies that could improve the client's overall healthcare risk management plan, including international travel medical insurance, providing medical coverage while out of the U.S., specified disease insurance, provides benefits upon the diagnosis of a disease named in the policy, critical illness insurance, provides a one-time lump sum benefit for a specific critical illness covered in the policy. Next strategy, replacing the current policy. Replacing the current individual health insurance policy may improve the cost benefit of the insurance. New insurer might offer better pricing when you consider the premium, deductible, and copays. Consider a higher deductible to control premium cost and to be eligible for an HSA. Align breadth of coverage to the individual's changing life needs. Consider the convenience, for example, the location of the service providers, the ability to see a specialist without referrals, and other factors that make the plan easy to work with. In summary, we've assessed the client's need. We've gone over how to assess the client's need for health insurance and reviewed strategies for improving the health insurance plan. Thanks for your time.